Welcome everyone to another episode of BayView Views. I'm Mark Dutram. Today I want to discuss significant development, obviously, with Joe Biden's withdrawal from the presidential race. I want to explore kind of the economic and the stock market implications of this event and consider both kind of short-term reactions and maybe long-term impacts. Joe Biden obviously has been a key role he's a kind of a career politician, but he's been shaping U.S. economic policies for the past few years, certainly. His administration is kind of focused on initiatives like infrastructure spending, tax reform, climate change mitigation, things like that. So his withdrawal from the race, what's going to be the impact on markets and the economy? And people are obviously then going to reshape and kind of reposition their thoughts on, what's the future look like for them, right? So let's kind of talk about short-term reactions. Volatility. Markets, obviously, they react to political uncertainty and increased volatility, right? We haven't really seen too much of this in the short term, but maybe there's a good explanation for that. So hold that thought for a minute because I want to kind of develop this thought a little bit. Fund flows, we've seen that a small amount of investors have moved towards more safe haven assets like cash and gold and government bonds, but really not enough to cause significant fluctuations in stock prices. And you might have even thought about doing this yourself, but I would direct your attention to our research that we did on markets and election cycles and their correlation. Sector-specific things. Think about that. Sectors directly influenced by Biden's policy, such as renewable energy, infrastructure. They may see some price corrections depending on who wins, right, the race in November. Conversely, industries like the ones that are facing kind of stricter regulations like fossil fuels and pharmaceuticals, they might experience a short-term gain if Trump wins, right? So let's talk about kind of the economic implication. Policy uncertainty. Well, Biden's withdrawal raises questions about the continuity of our current economic policies. It appears that Kamala Harris will be the nominee, and she shares, though, many of the same views as Biden. So key initiatives like Inflation Reduction Act, the infrastructure projects would probably continue if she's elected. Sometimes businesses, though, you think about it, they would delay investment decisions due to the uncertainty of the political environment, and that could potentially slow down economic momentum. What about market sentiment? Consumers and business confidence could be affected. If markets perceive that the potential successor as less favorable towards economic stability or growth, spending and investment could certainly decrease. Conversely, if a pro-business policies, seem to gain some traction, it might boost market sentiment and economic activity in the short term. Let's talk about the long term for a minute. Kind of the regulatory environment. The long-term economic impact is largely going to depend on Biden's successor. If Kamala Harris is the candidate, the regulatory approach that she would take would be similar, right, to Biden. And they would continue kind of influencing the same sectors like healthcare and technology and energy. But if Trump were to win, companies will need to kind of adapt to a new regulatory framework, which could affect profitability and long-term investment strategies. What about fiscal policy? Well, Biden's withdrawal might lead to shifts in fiscal policy priorities, but again, if Kamala Harris is the candidate, there appears to be no changes in tax policies or government spending or budget allocations impacting economic growth and stability in the same way, right? The direction of fiscal policy is going to play such a critical role in determining, the country's debt levels, inflation, the overall economic health that we're experiencing. And I would say neither party, right, has been fiscally responsible in the last 20 years, which has really kind of contributed to the conditions that we're in today. And that also means that either party, no matter who wins, is going to have to kind of rein in deficits if we're going to be fiscally responsible and sound for our children, right, and our grandchildren. So, Ben, back to my initial point, Joe Biden's withdrawal from the presidential race would normally introduce a significant degree of uncertainty in both the stock market and the broader economy. I think the last time this happened was in '68 with Johnson. But the markets, if you look today, have not really reacted too much. Why is that? Well, because again, if Kamala wins in November, we already have a good idea of what the continuing policies will already look like. No uncertainty, right? The market is also currently kind of forecasting a Trump victory, and that is really no change from when Biden was still in the race post-debate, right? The so-called, they call it kind of a Trump trade, has already affected markets to this point based on, his current lead in the polls. So remember, the market is a forecaster, and as uncertainty increases, so does market volatility. As volatility decreases, yeah. So again, the markets have a pretty good idea of maybe what's going to happen or what they think is going to happen, and as that unfolds in the future, that might change things. And so, the kind of the short-term reactions might be higher volatility, some sector movements. The long-term implications are really going to be based on the policies and the regulatory approaches of Biden's successor. So as an investor, it's kind of crucial to stay informed and adaptable in the face of these changes, and you kind of recognizing the risks and opportunities that lie ahead. So I hope that you've enjoyed this episode of BayView Views. Please reach out if you have any questions or comments, and hope you guys have an awesome day. Thanks.